Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. As always, we will try to scan the markets, looking for the best trading occasions, describing setups on the market, and telling a little bit about fundamental side of the market. So, what events are driving the market right now, what events are influential on the price at the moment. Let's see the macro calendar for today, because we had some interesting events. As you can see, we had a big pack of data from a Great Britain today, and you can see that most of them, well, almost all of them, were positive. Look at that. PPI higher than expected, house price index better, price different PPIs better than expected, but British pound is declining heavily because of this number, because of CPI, which came 1.8 instead of 1.9, which was expected. And this, well, previous number was 1.6, right? So we had a rise, 1.8. But market participants are not happy with this number because we didn't reach 1.9, and British pound is declining at the moment, and to be honest with you, quite heavily. Let me show you only the most important data from today. Calendar was pretty rich, as you can see. We also got GDP from Eurozone, which came worse than expected, and actually you can see decline. 0.5 was for the last quarter, and 0.4 we have now. Industrial production also dropped quite heavily, and CEF survey economic statement also went below 20. So a bit surprising data, to be honest with you. Also, we had the data from Germany, which also came worse than expected, but Chinese data, Chinese CPI and PPI were better than expectations. Overall, what we can see on the markets, maybe let me start with the stocks first. On stocks, trading muted after reaching all-time highs, after reaching new 19th months highs in terms of Asian stocks. Trading muted, so the traders, we don't have a big volatility, and traders try to hold those instruments near local highs. Everybody on the market, everybody is now anticipating Janet Yellen. Everybody's waiting for the speech from Janet Yellen, which we'll find out in 3 hours. And everybody's looking for guidance. What is going to happen this year? If we'll have 3 interest rate rises or 2. To be honest with you, I don't think that Janet Yellen will say something that we do not already know. Right? She's repeating this mantra all the time that Fed sees that the data is better, but they need more data to be sure that it's that the economy is definitely doing better. So they will wait. They will have a wait and see approach. Also, I don't think she will say anything significant because of the Donald Trump. He said that he will propose a phenomenal tax scheme on the end of February, in 2-3 weeks. So I don't think that Janet Yellen knows that, so I don't think that she will address anything significant today. More or less it should be the same approach. the same mantra that we already know, and it depends from the market participants how they will read that, if they will read that as a dovish statement or a hawkish. That's well, those informations are driving the markets right now. So let's see the charts. Maybe I will start with British pound to American dollar. As you can see here, this drop is caused by this CPI. Where is the closest support? Here, closest resistance is here. So we do have a kind of symmetric triangle formation or a pennant. This support will be still important even with this breakout, but this breakout can be considered as a false breakout. That Fibonacci line will be important as well. So that's the situation on a cable. There is no definite signal here in my opinion, but generally it looks if I had to trade in the long term it's bearish, but in the midterm it's bullish because of this upswing. Today I will also analyze a few instruments for you live that you will, because I always come here with prepared instruments, but I would also like to show you how I analyze instruments. So from the scratch, from the very beginning, when I open an instrument, I would like to show you what do I take into the consideration and how I work with my technical analysis on one particular instrument. So those are more or less interesting occasions here. Cable is not. I just wanted to show you the situation which happened after CPI was shown. But all of them are more or less interesting situations with good technical setups. And the rest of the instruments I would like to analyze with you live, that you will be able to see how I do that and what do I take into the consideration when I analyze the markets. Next instrument is a Canadian dollar to Japanese yen, where we spotted a nice trading opportunity, a nice long position here. And as you can see, the price advanced higher. And actually we had a long position here on our live trading account. I will show that position on live seminars that will soon start across the globe. Why we open long position here is because of this uptrend. Uptrend reached a horizontal resistance and didn't create a reversal pattern, but created a trend continuation pattern, which is a wedge. You can see that wedge with those black lines, right? So this is a wedge. Price was bouncing from the upper line, lower line of the wedge, but look at that. The price failed to test the lower line of the wedge again, right? So this and stopped on a horizontal support created by lows from the beginning of December and from the end of January. And they stopped here, which showed us that supply is not so strong and sellers are not committed to this movement. Buyers took over the situation and the price went sharply up, as you can see, almost 200 pips. And the potential target for this movement is the upper line of the wedge, and after the breakout is 100 pips to this resistance. So overall, what do we have here is a potential movement for 150 pips. But in my opinion, if they will break the upper line of the wedge, the price will go definitely higher. So even despite the fact that we are very far from the support, and it will be very hard to open to place a correct stop loss somewhere here. Stop loss should be under that green area anyway, so it will be hard. The stop loss will be wide, 250 pips, but still this position is worth opening because the price can advance higher once this orange resistance will be broken. Next instrument is American dollar to Japanese yen. Again, pair with Japanese yen, but definitely more popular than Canadian dollar and Japanese yen. What do we had here is a very similar situation, right? But first let me explain you why there is a blue line here. Because blue line is connecting long-term lower highs, and this is where this upswing, which started after Donald Trump was elected as a president, this upswing stopped there. Look at that, 1, 2, 3, 4, 5, 6 bullish weeks in a row after Donald Trump became president, and the upswing stopped exactly on that line connecting recent lower highs, and from this point the correction started. So the correction is shaped like a wedge, right? This is a wedge. Also, the correction was able to retrace only 38.2 Fibonacci here. From this point, the upswing started, and the price managed to break the upper line of the wedge, right? Price managed to break the upper line of the wedge, and now we're testing this level as the closest support. If we will be able to create a bounce from this point, we should expect at least 200 pips movement and another 200 to this trend line, right? In the long term, sentiment here is positive, but stays positive right now, and positive sentiment will be denied once the price will get below those lows. I'm not so sure if Janet Yellen will be able to trigger significant, huge, volatile movement here or not. It depends what she will say. I told you at the very beginning that I don't think she will say anything significant, that she will say anything influential, so most probably she won't be a price mover today. She won't be very influential, despite the fact that many traders are waiting for her, but they, in my opinion, they can be disappointed with her words. But anyway, as long as we stay above the black line, the sentiment is positive. As long as we stay above the orange support, above the 38.2 point Fibonacci, we can think about opening long positions. Australian dollar to American dollar. Here, after the same correction in a row, we created a pennant. We broke the upper line of the pennant, then it was a strong retracement. I thought that we're gonna make the same correction in a row, but instead of making 70 pips, we stopped on 58, so there is no correction equality. The price didn't want to make the same correction again, but bounced from the upper line of the pennant created before, and went sharply higher. And soon we just tested this horizontal resistance. We got the first initial bearish reaction, but with such a strong demand for Australian dollar, I think this resistance may be broken anytime soon. Sentiment on Australian dollar stays positive. We are telling you about that for a long time. As long as the price stays above this horizontal support, the sentiment stays positive and is positive. And from this horizontal support, the price went already 87 pips higher, and still advancing. The sentiment here is positive. Positive sentiment on Australian dollar is highly correlated with price of gold and silver. So maybe first let me show you gold. What's happening on this sorry, what do we have here is the price bouncing from the local long-term support, and price created a mid-term upswing. Upswing is respecting those Fibonacci lines with quite impressive detail. Look at that, right? So this is a correction of this downswing, and after we spotted a bottom here, you can place Fibonacci lines on the chart. So let me show you. First, 23.6 was respected as a resistance. Then after the breakout, it was respected as a support. Then 38.2 was resistance twice. Then 23.6 was a support. And then we had a false breakout of 38.2, but finally the price broke this level and went slightly below 50% Fibonacci. Bounced from this level and used 38.2 as a first support, right? So broken resistance became the closest support. What do I have here on H4 is a beautiful hammer, and after that the price advancing higher. Most probably we do have a divergence here. Well, always we can check obviously, but divergence in such situations is almost always present. As you can see here, there is a divergence. Is there a divergence in buy signal on CCI? Yes, CCI comes back above 100. It's a signal to buy. Maybe RSI as well. RSI, yes, we also do have maybe for the better visibility. Okay, no, it's about dollars. Okay. Style silver, no, I want to have colors, right, style. Okay, yes. So, yes, we do have a divergence here as well, right? So we have a divergence on MACD, RSI, and CCI. On CCI, we don't have a divergence, but we have a buy signal. So all the indicators are giving us a buy signal with this double bottom formation. And the price is advancing higher. In my opinion, they should get to $1,250 per ounce and test it again. Most probably they will bounce from it and finally break it. As long as we stay above the trend line, this red line connecting those higher lows, we should remain calm, and the buy sentiment is still present on this instrument. So if gold is advancing higher, is silver advancing higher as well? Yes, then actually silver is doing much better than gold. Well, maybe not much better because gold is doing just fine, but silver is really impressive with those higher highs and higher lows. They make higher highs and higher lows almost all the time, flawlessly. If you would look on a chart of silver to gold, I will actually show you. Our Twitter account. And these are our tweets, and this is exactly silver to gold chart. XAG to XAU, silver gold ratio, and for the last few months we are in the symmetric triangle. and the volatility dropped, and now silver is getting much stronger than gold is advancing higher. So if you believe in that and you're wondering if you should buy silver or gold, maybe silver is better option here. We broke from this channel down formation. We are still under the influence of this inverted head and shoulder. We should be aiming 38.2 Fibonacci level, but in my opinion, I would see silver on $21 per ounce, the level from June 2016. Euro dollar formed in 2017, formed this channel up formation, and after that we had a bearish breakout with this flag. This bearish breakout created a flag stopped, at least for now, on a horizontal support created by this low, and stopped exactly here. And now as buyers try to break the upper line of this flag. If they will be successful, that should open a way to the local resistance here. So actually, well, it's not the best risk to reward ratio trade, but potential stop loss is 45 pips, potential take profit is 80 pips, so slightly less than 2 times profit is 2 times bigger than potential loss, which makes it, as I said, not the best situation on the world, but still acceptable. And the last instrument from those which I prepared before the webinar is American dollar to Swiss franc. You know, we had a false breakout below important horizontal support here created by those highs back from 2016, from May 2016. The price created a flag went below this support. That was a false breakout, and then price came back creating false breakout pattern, and then they broke the upper line of the flag, and this looks like a beginning of a new bullish wave. First stop was 38.2 Fibonacci level, even despite this spike from yesterday at the end of European session. But now sellers try to pull the price push the price below 38.2 Fibonacci level. For the buy signal to be present again, I need to see the price above 38.2. So far they are below, so this creates an opportunity for a false breakout here, and maybe that can be a trigger for a bearish correction. Obviously the price advancing higher here, so going according to the technical analysis, will be price going lower here, so going actually against the technical analysis. And so actually what do we have? We have two opposite scenarios on euro dollar and American dollar to Swiss franc, which at the moment both of them are showing different directions and both of them look legitimate, right? That's kind of interesting. American dollar to Swiss franc looks bullish, so it promotes American dollar, and euro dollar looks bullish as well, but in the same time it promotes euro, so it shows that American dollar should be weaker. That's well, it's very uncommon that both of them will work. Most probably only one of them will work, but if you play smart, if you trade using good risk to reward ratios, so actually you're having 2-to-1 or 3-to-1, you can enter both trades, and even if one will go on a loss, the second one will cover the first one and also make a profit which will equal the first loss, so you'll be on profit with that situation. Okay, maybe I will show you oil and indexes. For that I need to switch between accounts. Okay, Brent oil. As you can see on Brent oil, we are back in the side trend, right? So upper line was not broken, lower line was not broken, but upper line was broken. That was a false breakout, as we can see. I think we can move the upper line slightly higher, delete this one as well, as it was already used for a downswing. As you can see, after this upswing the price declined sharply, and we are back inside the symmetric triangle formation, awaiting for a breakout. Remember that when we have a breakout from the symmetric triangles formation, there is always a horizontal, well, not always, almost always, a horizontal support and a horizontal resistance waiting for the price. So even if we'll get there, that's not a buy signal, because still we have to break that horizontal resistance, which goes even deeper. And if the price will go here, 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 and will break the lower line of the symmetric triangle, it's also not the signal to sell, because we still have to break the horizontal support here. So that's the situation on oil. Still waiting for something, anything significant. Let me show you DAX. Yes, DAX is playing the scenario we highlighted recently. So what we have here is an upswing. We had this correction. That was a flag or a wedge, it's not really important. We bounced from the horizontal support, we broke the upper line of the wedge, and now the price advancing higher, so the party on stocks goes on. Let me show you another instrument, for example S&P. Okay, and I said that I will show you how do I analyze the market. So first I look on the higher time frames to estimate what the trend is. Trend here is bullish, right? So I can only buy. And well, I won't show you how I trade, but how I analyze the markets, because it's not a live trading session, right? So you scan the markets and see, well, you scan through the time frames and see what's the local situation on lower time frames and higher time frames. As you can see, this is an uptrend and price is making higher highs and higher lows. What do you want to do is to see where the closest supports are. Actually, S&P 500 is not the best example because it has no resistances in front of them. But let me finish with this instrument. You also need to know how to deal with such instruments like all-time highs S&P, all-time highs indexes, right? Here situation is bullish. We just wait for the price to, if you want to buy, you don't want to buy with the highest price, maybe you can wait for the bit of retracement to test the local support. But anyway, let me show you, for example, American dollar to Canadian dollar. Okay, what do we have here? Is a downtrend, right? This is a downtrend. Price is above 23.6 and below 38.2. We also had this flag. Okay, the flag went to 50%, bounced once, they failed to test the upper line of the flag again, and they bounced from 50. That was a strong sell signal. They went outside of the flag, but came back, which was a false breakout, but they failed to push the price higher. Now the price advancing lower. So that was a false breakout. Okay. They had a chance to use it, because in theory that movement should go at least here, but they failed, and now they have to pay the price for their failure. As you can see, 23.6 is also a support created by lows from the end of September, from the end of October. Support. Okay. On lower time frames, you can see that the price making lower highs and lower lows. Let me delete those. Okay, and the price is pushing on those lows. As you can see, we had 3 attempts to break it, but none of them was successful. We can assume that those traders who bought here, where do they have their stop losses? Somewhere here, right? Stop loss for a long position is a short position. So as it almost always happens, once the important support is broken, the movement accelerates, because it's driven after some time by the stop loss orders, and actually that's what can happen here. The closest resistance is this midterm trend line, different color. So what's the scenario? As long as the price stays below this line and above this line, the sentiment is neutral. When this line will be broken, the upper line will be broken, it will mean that this support was defended, and most probably the price will advance higher. On the other hand, if the lower line, if the 23.6 will be broken, that should trigger a sell signal here. So as you can see, it's not rocket science, you just play the odds, right? You play the odds, so you try to see which side is winning at the moment, and you just try to join them, right? If none of the side is winning right now, like for example here, you're not joining the market, because the odds are more or less even, right? It's 50-50. The price can do this and do this, but if one support or resistance will be broken, that will increase the odds of a movement, because it will show us that one side is significantly stronger than the other, and what you would like to do is to join them. Simple as that. Rest of the instruments we will analyze tomorrow. I hope you like what you see. So far, we had some decent occasions today. Thanks very much for watching, and remember, Janet Yellen speaking soon can be influential on the markets, but in my opinion they won't say anything significant. But you always have to stay sharp and watch for the higher volatility. Thanks very much, and goodbye.